Welcome to SelfTax YouTube channel. If you're an expat, business owner, or landlord and you're not subscribed yet, this channel is for you. We break down tax rules, deadlines, and changes clearly and simply. Hit subscribe and stay compliant, without the stress. Online selling in the UK has changed. In 2026, HMRC receives more data from online platforms than at any time in the past. Marketplaces now share information automatically, and HMRC can see how much you earn even if you do not tell them. In this video, I am going to explain how HMRC tracks online sellers in 2026, what income you must report, how the rules work, and the mistakes that can trigger penalties. From 2024 onwards, online marketplaces were required to begin reporting seller income to HMRC. In 2026, the system is fully active. This means HMRC receives annual reports from the platforms you use to sell items, even if you do not think of yourself as a business. The report includes your total sales, the number of transactions, fees withheld, your name, your address. Your bank information is used for payouts. This gives HMRC a clear picture of your activity. These rules apply to anyone who sells online, whether it is full-time, part-time, or casual selling. They apply to people selling used clothes, people selling unwanted items, resellers, dropshippers, handmade product sellers, side hustles, people who flip items for profit. If you receive income through an online marketplace and your total sales are recorded, HMRC receives that information. Taxable income includes anything you sell with the intention of making a profit. Here are examples. Selling items you buy specifically to resell. Selling handmade items. Running a Vinted or Depop store. Selling on Etsy, eBay, or Amazon. Dropshipping. Flipping items such as shoes or electronics. Selling digital products online. Even if you think of it as casual selling, HMRC still treats it as income if you are earning with a profit motive. Some sales are not taxable. For example, selling your own used items for less than you paid. Selling items at a loss. Clearing out belongings without any intention of making a profit. These are considered personal sales and do not create taxable income. However, online platforms still report the activity. This is why HMRC may ask you to explain your sales if the numbers look high. There are two important allowances. 1. The trading allowance. This is £1,000. If your total income from selling is under £1,000 in the tax year, you do not need to report it. 2. The personal allowance. If selling is your only income and your total income stays under £12,570, you may not owe tax. However, if your platform sales exceed £1,000 or if HMRC sees consistent activity, they may still ask you to register for self-assessment. HMRC now uses several methods to identify underreported online income. They match online platform reports with your self-assessment. They compare your bank deposits with the sales recorded. They look for frequent payouts from platforms. They check profit patterns such as buying and reselling items. They use algorithms to detect repeat or organized selling. If the numbers you report do not match platform data, HMRC may open a review. These are the mistakes HMRC is targeting in 2026. Not reporting income because the seller thinks it is casual. Relying on the trading allowance without checking the total sales. Confusing personal sales with business sales. Not keeping receipts for items purchased to resell. not declaring profits from flipping or dropshipping, ignoring income from multiple platforms. These mistakes trigger automatic alerts in the system. If your sales exceed 1,000, you must report your income. You need to provide your total sales, your expenses, your profit, any inventory or cost of goods sold, any platform fees. This information allows HMRC to correctly assess your tax position and avoid penalties. In 2026, online selling is fully visible to HMRC. If you sell regularly or make a profit, you must report your income. The best approach is to keep simple records and file accurately. Understanding these rules protects you from penalties and gives you confidence that your return is correct. Stay informed and watch the next episode in this series. Thanks for watching. Subscribe to SelfTax for clear practical UK tax guidance. Stay informed, stay compliant, and stay one step ahead of HMRC.